Making money as a trader, in my opinion, is one of the toughest challenges. Many traders struggle to maintain their profit or even to make money at all. I want to discuss some of the common reasons why traders often fail to be profitable, alongside with some strategies to overcome these challenges. One of the reasons traders find it hard to make money in the market is because they often don't know what they're doing. You can't expect to jump into the market or any field and excel right away. It requires time, proper education to truly understand how the market operates, how to trade effectively, and how to execute real trades. Many traders believe consuming educational content like watching videos will automatically make them successful. While learning is essential, the most valuable experience comes from actually trading. It's about being in the thick of it, making real trades, and gaining hands-on experience. Once you have the educational aspect covered, that's just one piece of the puzzle. The next step is to start to execute real trades, which most traders overlooked. They often think after they learn a practical strategy or understand how to trade, they're ready to dive in. It's important to remember while having the knowledge is great, applying it is often the most challenging part. If you have mastered the educational side and ready to apply what you have learned, here's some recommendation. First, begin with paper trading. This can be helpful for getting a feel of the market and understanding your trading platform. However, it is crucial to recognize that paper trading has its limitation. While it allows you to practice, it does not fully replicate real trading because it lacks the emotion and mental stakes involved in a real actual trading situation. Once you have solidified your education and practice through paper trading, it's time to implement this method in the real market and assess their effectiveness. If you're hesitant to use real money right away, consider backtesting your strategy. Another reason why traders struggle to be profitable is the lack of a distinct edge. To succeed, you need a clear advantage in the market and a solid understanding of the strategy you plan to use. It is essential to ensure your chosen strategies are backtested and have demonstrated good success rate. As a trader, your role is to identify strategies that resonate with you and align with your personality. For instance, I've seen traders attempt to scalp without having the temperament for it. Or they try to emulate strategies from others they see on YouTube, Instagram, or even Twitters. While it's beneficial to learn from others, to truly excel, you should integrate aspects from different traders and tailor-make them to suit your trading style. It is important to truly understand what you're trading and how you're trading it, so you can develop your own playbook. Recognize this is your unique approach to the market, tailored to fit your personality. By aligning your trading method with your personality style, you'll create a distinct edge in your trading strategy. Many traders, however, execute their trades randomly, lacking consistency in their ideas, execution, and overall approach. This randomness can undermine your ability to scale your trades or achieve consistent profitability. If you find yourself hoping, consistently switching from one approach to another, it can hinder your progress as well. Many traders overlook that their strategy performs well under certain market conditions, but may struggle in others. It is essential to recognize that. When you outline your trading strategy, you also need to understand the specific market condition in which they are effective. Consider whether your strategy are adaptable across different scenarios. For example, how should you adjust your approach when the market becomes flat, range, accelerates, or experience a gap up or a gap down? It is crucial to determine whether you should stick with your trading strategy during these shifts or modify to best suit the trading market environment. If you have a trading strategy that have previously shown you good results, don't be quick to abandon it just because it's underperforming. Instead, analyze why it's not working. Are you making poor trading decisions? Has the market changed? Or perhaps the strategy wasn't robust to begin with? Understand these factors can help you refine your approach rather than simply giving up. Sometimes traders might get lucky, but it's crucial to identify whether luck is playing a role or there's a deeper issue at hand. This requires dedicating time and effort to understand these elements. A lack of discipline and patience is another common issue. I often see traders with solid strategies and effective risk management, but they struggle personally. They may lack the discipline to stick to their trading plan or to execute trade as intended. Additionally, they often lack the patience to wait for their setup to materialize, but instead they rush to place a trade driven by the desire to make quick profit. In my view, these challenges are more about personal issues than trading skills. A person's inability to maintain discipline in their trading usually reflects a lack of discipline in other areas of their life. You can't be disciplined in one aspect and undisciplined in another. Both are interconnected. To be successful in trading, you need to cultivate discipline and patience. If you don't develop these qualities in your personal life, it will be challenging to apply them to trading. So for example, if you commit to going to the gym but consistently skip over workouts, this pattern is going to carry over into your trading behavior. To cultivate discipline, it's important to apply across all areas of your life. If you commit to going to the gym at a certain time, make it a daily habit. By doing this consistently, you will find that discipline naturally transitions in your trading. In trading, you need a significant amount of discipline and patience. Much trading involves waiting for the right setup, not just consistently taking trades. Your role as a trader is to identify the opportunity and act on them effectively. It's not just about spending hours in front of the screen and executing random trade without a clear strategy or edge. In my first 1 or 2 years of trading, my main focus isn't about making money or being profitable. My main priority is to become a better trader. And during this time, I am not stressing over making profit. Instead, I am dedicated to mastering the following: identifying my trading edge, understanding what strategy worked best for me, understanding myself as a trader by analyzing how I respond to winning and losing days, how I handle stop losses, and deepening my knowledge of the markets, learning everything I can know about how it operates, and how I deal with emotion of FOMO when price rallies. Another major mistake I see is that traders not tracking their performance. Many traders enter the market with no understanding of their data. They don't know which trade they excel in, what works for them, or what doesn't. The main goal in the first year isn't to aim for a specific profit target. That mindset can create unnecessary pressure, which can lead to poor decision making. I've seen many traders set money goals too early, and as a result, they struggle to become profitable or even stay in the game. That pressure forces them to take trades that they shouldn't, or even force trades out of desperation. And another major mistake I see is that traders not tracking their progress. I believe in treating trading like a business, and like a business, tracking is key. A business owner monitors expenses, identify what's working and what's not. And similarly, as a trader, we need to track every trade and analyze our performance to refine our edge and build a solid foundation for long-term success. When many traders first start out, they don't focus on the important aspect of trading. They don't keep journals. They don't track and analyze their trade. They just simply open up an account and start placing trades at random. While this approach might seem easy, it won't help you evolve as a trader. If you truly want to grow, you need to understand your metrics. You need to identify the area where you're struggling in. And the best way to do that, in my opinion, is by tracking your trades. You should be recording every single trade that you take and noting details like your stop loss, your risk to reward, while you entered and exit a trade. And you also need to track your day by looking at your pre-market game plan and comparing it to what you actually did on that day, and then analyzing the outcome. I can make more in-depth videos on tracking and journaling your trade, so if that's something you're interested in, just comment below and letting me know. As a trader, it's important to ask yourself, what's causing me to lose money? Where am I making money? When am I making money? Am I leaving profit on the table? What's causing me to exit too early? Am I sticking to my stop loss? Does my stop loss make sense? So for example, when your stop loss is hit, does the price continue in the direction you anticipate, or does it reverse? The only way to gain this insight is by consistently tracking and journaling, and analyzing your trade as well. Every trader have their own unique psychology. We all think and operate differently. So when exposed to trading, we'll encounter different challenges. Likewise, we'll react to those challenges in our own way. Our jobs as trader is to identify our mental block and personal psychology factor that affect our trading. For example, I know traders who struggle with following their stop loss. The reason that they have this issue is often tied to their mindset. They struggle with following their stop loss because they don't want to lose money or admit anything is wrong. Your job as a trader is to identify the psychological challenges that arise as you trade. What is the recurring mental roadblock that affect your decision making? When you set a tight horizon for success, it creates unnecessary pressure. And it's not like you shouldn't aim high at all, but when you start saying things like I need to make 100,000 my first year, or I need to make 200,000 my first year, it set the bar extremely high. And these unrealistic expectations, whether set weekly, monthly, or yearly, only add more stress to your trading. As traders, we don't need to create additional stress for ourselves. Instead, your expectation and goals should be focused more on progress rather than an unrealistic outcome. One common issue is setting goals focused on specific financial target, rather than identifying the real wins along the way. For example, if you can identify which strategy is making the most money, that's a win. Small wins like these are the ones you should be focusing on your early trading journey. I don't want to make trading more complicated or difficult than it needs to be. Just simplify things. Make it comfortable, more concise, and focus on the small wins. Let go of the timely horizon and the massive financial goal. Get rid of the unrealistic expectation, because over time, this approach will give you much higher chance of success. One thing I've noticed is that many traders do not know how to lose. And I know it might sound strange, like, what do you mean that traders don't know how to lose? But to be a successful trader, you need to understand how to handle losses. Many traders who aren't profitable struggle with losing because of ego, or maybe because they don't know how to cope with losses. Everyone have different issues, but the key is to understand why are you losing. More importantly, why is it okay if it happens? Let's take a step back, because I know some people might be thinking, what do you mean you have to be okay with losing? And what do you mean you have to be good with losing? And the truth is, in trading, you're going to lose a lot. In fact, most of the time, you will lose. But the trade that you do win, if prepared with proper risk management, are the one that will compound and make the most money over time. I've seen traders have great weeks and months, but the moment they experience a loss, they lose control. They become erratic and they don't know how to manage their risk. This is where many traders fail. They don't know how to control and protect their downside. As traders, our number one priority is to protect our downside. We need to know if the trade goes wrong, how much will we lose? You need to be comfortable with that loss and ensure it's an acceptable amount relative to your account size. When you lose on a trade, there's two key things to evaluate, and this is how I look at it. Did I follow my game plan? And even if I lost money, was it a good loss? Meaning, did I stick to my game plan despite the outcome? There's a distinction between a good loss and a bad loss. And a good loss is where you follow your game plan. You made your trade based on the market movement and you had an edge, and for whatever reason, your edge did not work out. And that's okay. There will be time where your playbook, your strategy, or your setup doesn't perform as you expected. And when this happened, you have to ask yourself, did you have high probability of success when you enter that trade? If your answer is yes, and it didn't work out, then you need to accept it and move on. Next thing to consider is whether you follow your game plan. Did I stick to my stop loss, or did I lose the amount of money I planned to lose? It's essential to remember that risk management is a part of accepting that we plan to lose money on every single trade. If you answer yes to those questions, then you follow your game plan and your risk management plan. And these trades can still be considered success, even if it results in a loss. On the flip side, a bad loss occurs when you lose money without a clear edge. And this happens when you start taking random trades without following your stop loss or sticking to your risk management or game plan. And instead of losing $200, you end up losing $1,000. And that's what I define as a bad loss. It is crucial to distinguish between good and bad losses, which is why I mentioned journaling and tracking your trades. They help you understand what works and what doesn't. And as a trader, knowing how to accept losses is key, because we'll encounter losses every day. And the final reason I believe traders often struggle with staying profitable is due to poor risk management, which is one of the most critical aspects of trading. And as a trader, our main responsibility is to manage risk. This is the only factor that's within our control. We can't predict if a stock will rise or fall. We can only enter based on our edge and based on the probability we believe it has. Let me know in the comment section about challenge you face with being profitable or just trading in general. Thanks for watching.